Good morning, all of you. In class 12th accountancy, we are on the chapter number 8, that is cash flow statement. And in cash flow statement, I already explained about three activities, that is operating, investing, and financing. And in CFS, yesterday I explained you about operating activity, and today I am going to explain you other remaining two activities, that is investing and financing. Theory part we already completed. So see, I am going to show you, and it will be easy for you to, if you have to make and note down your own notes, please. It will be easy for you then. Cash flow statement is classified in three activities: operating, investing, and financing. And last step is to calculate, as I told you, net increase or decrease in cash and cash equivalent. So first activity, please note down the format in your course. As I told you, according to revised accounting standard 3, you will have indirect method. So first of all, heading, see the heading, cash flow statement for the year ended of that name of the company which is given in the question. One by one, please note down. Have a blank format first. Then it will be easy for you to fill it. Now first, see the font also. Cash flow from operating activity. You can put the double lines, underline, and make the big font, or you can write it in capital letters. So cash flow from operating activities, NPBT, net profit before tax and extraordinary items. As per working note, I will tell you how to write the working note. Then you will write that amount in outer column. Then inner column, some items to be added and some to be deducted. See, what are the items to be added? Generally non-cash and extraordinary adjustments to be made here. So the appreciation write-off, first point, very good. Second point, intangible asset write-off, not the purchase, write-off. Goodwill, patent, trademark, amortized, means these three intangible assets. Then interest on bank OD or on borrowings, short term, long term, and even on debentures. Interest paid. Yes, please note down. The next, loss on sale of fixed assets. I'll tell you further how to calculate loss if it is not given. Making fixed asset account, very good. So loss on sale of fixed asset to be added, and increase in PDD, provision for doubtful and bad debts, doubtful debts. Okay, so that will be added here. Now again, depreciation write-off, goodwill, patent, trademark write-off, interest paid, loss on sale of fixed asset. Now what are to be deducted here? Interest paid should be added, then interest received should be subtracted. Dividend received, rental received. Then if loss on sale of fixed asset to be added, then gain on sale of fixed asset should be subtracted. Easy to learn. See, if we are paying interest, we should add it, and if we are receiving interest, we should deduct it. Loss on sale of fixed asset, this one. Loss on sale of fixed asset is to be added. Then reverse it. Gain on sale of fixed asset should be subtracted. Very good. Then increase in provision for doubtful debts to be added. Then decrease in provision to be doubtful debts should be decreased. Clear? Got it? Yes. So it's easy to learn these two. Now that amount in outer, see all you will do it in the inner column. Then in outer column you will get OPB WC square. OPBWC square means operating profit before working capital changes. So what to do? A NPBT plus B added items minus C deducted items. So these final result will be known as OPBWC square. Operating profit before working capital changes. Now, we will do the adjustment of working capital. Working capital means CA minus CL. So, working capital changes, you can learn a very simple word, that is DCA, ICL. Decrease in current asset and increase in current liability. And you know about the current assets, inventory, trade receivable. And you know about the current liabilities also. Yes, trade payables. Very good. See. And ICA, DCL will be subtracted. So when we add OPBWC square and add DCA, ICL and subtract ICA. See, it's easy to learn by this way. ICA, DCL. Then you will get this answer. And this will be known as cash generated from operation. Cash generated from operation means, yes, what? Okay, note down this one. OPBWC square plus DCA minus ICA and minus ICA DCL. Then you will get cash generated from operation. And when we paid income tax, then we will get cash flow from operating activity. If that is negative, we can write cash used in operating activity, that final amount. This I explained you in the previous video also, yesterday. Now second activity, cash flow from investing activities. Cash flow from investing activities. So I told you, see here, in investing activity, we think about NCA, non-current asset, which is of two types, tangible, intangible. Tangible means land and building, plant and machinery, furniture and fixtures, vehicles. All will include in investing activity. Okay, see. And in investing activity, inflows and outflows both are. If we purchase any NCA, cash will outflow. Okay, you will show that outflow in brackets, not put the minus sign. And if you are selling your old asset, old non-current asset, used land and building, plant and machinery, furniture, vehicle, then if you are selling the NCA, cash will inflow. So be careful about that. By selling, cash will inflow, and by purchasing, cash will outflow. Okay, so see, proceeds from sale of fixed asset, proceeds from sale of long-term investments, proceeds from sale of intangible assets, interest dividend received. Now reverse of it, write the opposite of it. Proceeds from sale of fixed asset is inflow, then payment for purchase of fixed asset will be outflow. Sale of investment will be inflow, then purchase of long-term investment will be outflow. Clear? So, when you subtract outflow from inflow, you will get the final result. And if that is positive, you will write cash flow from investing activity. And if that is negative, you can write cash flow used or cash used in investing activity. So in investing activity, generally two things are there, sale and purchase of fixed asset, non-current asset. Okay. Now, when you sell, cash will inflow. When you purchase, cash will be. Now, cash flow from financing activities. See, in financing activities, we have to write all sources of finance which are generally long term. In class 11th, we explain you that there are two sources of finance, own and borrow. Own sources are known as equity, shares, yes, and borrowed sources are known as external sources are known as debentures and long-term loans. So here, if the organization issue of shares and debentures, if they issue shares and debentures, cash will be inflow. How? Company is issuing shares to the common public and debentures to the common public, then they will get the cash or bank. Proceed from other long-term borrowings. Organization is taking long-term loans, borrowed fund. So that will also in here. Bank OD and cash credit short-term loans are also here. Now, outflows. Final payment made during the year. Interim dividend paid during the year. Paid means outflow. Payment of interest on debentures, whether short-term or long-term, that is also outflow. See, payment means cash is going out. If cash is going out, it means that is outflow. Now you can see if the organization is paying dividend to shareholders, that is outflow. Interest on debentures, that is outflow. Interest paid on long-term loans, that is also outflow. Okay. Repayment of loans. The organization has taken loans, now they are repaying. There is outflow, of course. So repayment of loans, outflow. Then in accounts you have learned redemption of debentures, repayment of debentures. Company is redeeming the old debentures. It means the company is taking back their debentures and giving them payment. That is cash outflow. So redemption means repayment, redeemed. In debenture chapter, we explain you about that. Then buyback of own shares. This is also a term we explain you in the share capital chapter, that company can buy back their own already issued shares. So company is taking back their shares and then making the payment. So finally, they will have that balance, which is known as cash flow from financing activity. But if that amount will come, final amount will come in negative, then you can use cash used in financing activity. So when we add these three, what are these three? First from operating, second from investing, third from financing. The final result will be known as net increase or decrease in cash and cash in outer column. Means the final results will be here. This shows that how much amount will be increased or decreased. Net means all the three activities, operating, investing and financing, and finally how much amount is the actual exact net inflow or outflow. So then if, yes please, if we add cash and cash equivalent of the beginning. Now what is cash and cash equivalent? Already I explained you, like cash in hand, cash at bank in liquid form, short-term deposits in the bank which you can withdraw, current investment and marketable securities. Okay? Don't include bank overdraft here. That is in financing activity. I told you about that. So all these are cash and cash equivalent should be added. When we added opening in the net change, the answer will be closing cash and cash equivalent. Means at the end of the year how much cash and bank they have. See, increase and decrease may be treated under CL also, but alternative, generally it is that part. Now, next, how to calculate net profit before tax and extraordinary item. In the beginning, I told you that I will explain you it through working note. So even in cash flow statement, you have to show it through working note. Net profit before tax and extraordinary items, NPBT. See, simple. First, you have to find out net profit as per SOPL, statement of profit and loss, or simply difference between closing and opening balance of surplus. So how to calculate NPBT? Yes, simple way. NPBT. First, N of the year, current year minus previous year. Current year minus previous year. Simple. Closing balance means current year. Opening balance means of previous year. So you will find out the difference and write here. Then transfer to reserve. That is also by the same way. You have to learn this one. Current year minus previous year. If the amount of current year is 1 lakh and amount of previous year is 80,000, you can find out that 20,000 is the profit. Then transfer to reserve, how much amount is transferred to reserve, you can find out by the same way, current year minus previous year. Dividend paid during the year, interim dividend paid during the year, then provision for tax of the current year. See, current year's provision for tax or the provision for tax made will be here and paid will be subtracted in operating activity. Clear? Now, refund of tax is there, then also to be minus. So, NPBT, net profit before tax and extraordinary items. Clear? Now, note down two main points of this topic, which is changed according to the new pattern. That is to not to be given in the NCRT, but you should be careful. That is according to the new pattern, that current investment to be taken as marketable securities unless otherwise specified. It means that should be treated as cash and cash equivalent, and bank overdraft and cash credit. Don't take them as current liabilities. See, these are current liabilities, but while making cash flow statement, these are to be taken as financing activities. Why? Because bank overdraft and cash credits are also source of finance. That's why they are taken to financing activities. Okay, from tomorrow we will start numerical, but first of before it, I want to show you the treatment again. See, one by one, cash flow statement is a statement that shows flow of cash and cash equivalent during the year, means receipts and payment of cash. Then what are the cash? Cash and bank demand deposits. What are cash equivalent? Short term, highly liquid. There are three activities. Yes, these you should be careful about that. Operating activities means activities, main activities of the organization. Investing activities related with the long-term asset. Financing activity related with the owner's capital and borrowed capital. Yes, very good. Now, how to prepare cash flow statement? Three activities: operating, investing, and financing. And at the end, we should find out by adding the opening balance, we can check the closing balance as well. And one more thing I want to tell you. See, in few books, that is according to the old pattern, but according to the new pattern, proposed dividend, both on equity share and preference share, are paid after being declared by the shareholders in the AGM, annual general meeting. AGM is held after the end of the every financial year. Okay, so proposed dividend is to be not to be provided in the books of account, but is to be disclosed in the notes of accounts as contingent liability, payable upon being declared or approved by the shareholders. Okay, dividend is an appropriation of profit, distribution of profit. Yes. Clear? Now see, first activity, font you can see operating activity. First we calculate NPBT, net profit before tax, and extraordinary items which I show you through working note. Then these are adjustments to be added, these are adjustments to be deducted. This will come as OPBWC square, operating profit before working capital changes, that's you can learn. Then DCICL and ICA DCL should be subtracted. This will be cash generated, and when we pay less tax paid, simply provision of tax of previous year, that will be subtracted, that will the operating activity. Then investing, generally you can learn sale of fixed asset will be inflow, purchase of fixed asset will be outflow. Now in the question, in place of fixed asset, something name of given asset given. Cash flow from financing activity, issue of shares and debentures, and payment of share and debentures. So that will be net increase or decrease, and opening cash and cash equivalent to be added, and closing cash and cash equivalent to be subtracted. And be careful. See, this is the working note you have to give at the end. This will be not to be shown in cash flow. You have to calculate first of it. Then important note, bank overdraft and cash credit to be shown as financing activities. I am sure you all will be able to do the numericals, which we will start from tomorrow onwards.